presentation of TFNN. The Trader's Edge with your host, Steve Rhodes.
Good morning from TFNN. Welcome to the September 16th terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a magical Monday. I know I did. And let's make sure that you and I, that we do all that we can do to have a terrific Tuesday. And one of the best ways we can start off our day is to always remember that everything in life happens for us, not to us. Something to think about. Now, for the next 2 hours, I'm going to do everything that I can to share with you extraordinary tools that help us identify where price is headed to. That means we'll look at that lightning bolt pattern, that A to B equals CD. We'll go ahead and we'll become experts of buying and selling that D point. That's really what it's all about, because we want the market to do 75% of the work for us. We'll take a look at Japanese candlesticks. We'll take a look at Fibonacci retracements and expansions. We'll look at the Rhodes momentum trading indicators. We'll look at TAS market profiles, Chapman waves, you name it. We will use it in order to help identify what the market is doing, what your stock is doing, currency, commodity, whatever it is that you might be trading. And of course, that means you can always reach out and give us a call at 877-927-6648. Internationally, it's 727-445-1044. Would love to hear from you. That way, the two of us, we can go hunting for those bulls and those bears out there. Look, it is terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow futures are trading off about, where'd they go? About 36 points right now. S&P futures off 4, NASDAQ down 14, Russell down about $2 right now. We've got Goldilocks trading up $1, trade at $12.36, silver up 9 cents, trading at $18.71. King dollar having a little bit of a break this morning, off only 4 pennies, trading out at $84.35. If we take a look in the pre-market out here, a couple things jump into the upside. Ticker symbol GRT, Glimcher Realty looks like maybe a buyout out here. Washington Prime to buy them. They closed at 10.59. Looks like that's somewhere around the 13.79 level out there. SodaStream making it on the charts here early this morning. They closed at 31.48. They're trading at 32.97. Yahoo up just a tad. It closed at 42.55. It's up, trading at the 42.90 level. To the downside, Apple leading the charge. Not necessarily what the NASDAQ wants to see after day one of selling, of liquidation to make room for Alibaba out there. The $99, 99.95 is where Apple is trading right now. It closed at 101.63 out here. Facebook down this morning. It closed at 74.58. It's trading out at 73.93. It had a tough go of it yesterday. It tagged its market profile low at 73.57. So we'll see if that level will hold as support. A quick peek across the globe, though. Let's go see what we've got going on over in Europe this morning. DAX off 49 points, FTSE down 33. A sea of red in Asia last night. I think the Nikkei might have been open. Not then that's a 36. I think it was open yesterday. Yeah, it was. Off 36 points. The Hang Seng down 220, and the Shanghai off 44 points. All right, let's go begin with our markets. And where else can we begin other than taking a look at the NASDAQ, right? So let's go take a look at the NASDAQ futures, I should say. Let's go take a look at its daily chart out here. This is the December contract that we've got up on our screen. And the very first thing that we want to do is, remember, the NASDAQ here has given us some bearish signals. So it was well before yesterday that the NASDAQ was providing us with information, at least with regard to where the bears were lining up. And it did that beginning on September 3rd. It had some additional indications on September the 9th out there. Both of those candles, those are key reversal candle sessions. Those are bearish engulfings. Those take place. In order to be a key reversal, you need 3 things to occur. You've got to come from an extended condition. It means the market needs to be oversold or overbought. In this case here, it would be an overbought condition. One of the best tools to do that is utilizing that relative strength / relative weakness indicator. In this case here, well above the 70 level as we were trading into that September 3rd time frame out there. The same thing on really September the 9th, at least the beginning of the session out there. So you've got that. You've got to have a close that is in the opposite direction of the trend that it came from. That just means one tick lower. Well, we got that. And what you have to have is the prior day's high and low needs to be exceeded by the current day. Well, we got that both on September the 3rd and September 9th. Now, the cool thing about that is you know where your level of resistance is. Any close above that, and this is obviously now what we're seeing here is a strong bearish connotation, that any close above the high of 4106 or 40, we'll use the 4106 level. That's the high from September 3rd. You know, nothing more bullish than a failed bearish pattern out there. So that is the key level to be watching. Now, what we've got going on here as we speak, we've got the market profiles that were busted to the downside yesterday. We've got volume behind the move, so that's some conviction. Now we take a look at the different floors that are out here. Now, here's the problem with the NASDAQ. Well, if we take a look at floors, there is a floor that was built out here right around the 39.65 level. And what I'm coming back to, folks, is the July 23rd, 24th, really through that downdraft day on July 31st, right? So if we just simply, we'll draw a little blue line across the top of that July 31st level. 39.66 is the number there. That's the number to be watching. So that may be an area where you would find some support. But let's go take a look at Fibonacci retracements out here. We're going to take a look at that August 8th low all the way to the high that was put in here on September the 3rd. And what we're going to see is not just too much further below us is 39.96. At 39.96, that's your dead cat bounce, your 0.382 retracement level. So the levels to be watching for potential support are 39.96, 39.66, and then finally 39.29 out there. 39.29 will take you down into the 0.618 retracement level. It would look to me more likely that it's that 39.66, 39.29 level that we should be watching. Now, in a quick fashion out here, what the NASDAQ is doing is getting towards that oversold condition. You got the RSI right now, get us the daily contract we're looking at the 47 level, getting down towards 30 will put you into some oversold conditions out there. But we'll take things one day at a time. Now, a little different story inside of the Dow yesterday. The Dow being the only one that really had any kind of bounce. We saw a bounce certainly intersession, in fact, as we started the day, because when the market opened Sunday night, it was an immediate flush down the toilet. As futures, Dow futures were down, I don't know, 59, 61 points, something like that. And so there was quite a bit of a bounce, really, when you put things in perspective with regard to what the Dow did yesterday. But let's go see what the Dow is doing today out here. The Dow itself giving us signals of being tired. Those tired signals being nothing more than small-bodied candles that have been in place really ever since August 27th. You know, they may not be reversal candles, but they are candles that identify a market that is tired. And, of course, it was tired after that 4-minute mile that it ran from August the 8th all the way up to the highs that were put in on August the 26th out here. Now, what the Dow is not done, if we use the same market profiles as one of our indicators, is they have not broken down below the support level. 16,880 is the magic number today. You're trading at 16,899. If you see a break, if you see a close below 16,880, what is that likely set up? Well, really, a similar condition with one exception out here. Let me pull this back. Well, I think without one exception. Let me pull it back and make sure about that. Yeah, there's really no floor with inside of the Dow futures out here, and so it says you really break the that market profile of 16,880 out there. Okay, the dead cat bounce 0.382 retracement 16,715, but you'd have to say it's the 0.618 area that would really become the target. Well, shoot. If you're going to make it down there, you might as well go test that swing point from August the 8th. And I suspect that that is what we would see out here inside of the Dow, inside of the Dow futures. So the range here looks like 16,490 until proven otherwise, 16,496 to at least the top of that candle session of 16,143 inside of the Dow futures. If we take a look at the S&P futures out here, again, we're looking at daily charts off about 5 points this morning. The S&P futures yesterday, the day before that, so on Friday, just breaking their market profile low. Yesterday, testing that and rejecting it. An old support level now becoming resistance out there. That shows you a change in polarity. So what does that mean? Well, it means inside of the S&P futures, as far as targets that we should be looking for coming out, also off the August 8th area into the high from September the 3rd. Hey, your first target, 1956, most likely 1928 out there. And let's face it, if it too can get to the 1928 level, might as well go test that August 8th swing point out there. But the first test is going to be 1956. It closed back above 1977, 75 today. Profile numbers compute as 1977.63, but we only trade in quarters out here, so can't do that. But any close above that, and that might have to make us say, something to think about. Lastly, let's go take a look at the Russell 2000 out here. Russell 2000 trading off about 3 points, a 10-minute delay on this chart out here. So numbers are going to be just slightly different if you're using a live data feed. Nonetheless, Russell 2000, that ought to pull back into a retracement level. Well, I'd have to say actually the Russell 2000, if the NASDAQ is going to get going, the Russell 2000 ought to trade back towards that 1080 level. It's a consolidation range. 877-927-6648. This is Steve Rhodes. This is TFNN. Thanks so much for being here, folks. We'll be right back.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It is always better when we're together, folks. Let's go check in on the 5-hour energy chart here for the NASDAQ. It's all about the NASDAQ, and, of course, all about the NASDAQ. So let's go take a look at a number of different tools out here. Number one, if you're watching us on Tiger TV, what the chart that you're looking at here, this happens to be my Ninja Trader chart. It's got all kinds of tools that I use to identify what the market is doing. These are charts that show up in my daily newsletter service, Mastering Probability. You can test drive that, by the way, for the next 30 days. Just go to the homepage of TFNN.com, click on my name. That'll take you into the sign-up page out there. And if we take a look at the, first just focus on the blue horizontal lines going across my screen. See, the market, especially the NASDAQ, had been in a consolidating pattern out there, a 50-point consolidation pattern. And yesterday, we saw it was yesterday. It was actually on Sunday evening. Was it Sunday evening? Let me get Sunday evening when we actually saw a break of that consolidation pattern. That took place as the market had opened. We saw yesterday as we came right from the gate, right at 9:30, we saw the selling begin. Now, that 50-point consolidation, see, the key to trading is to understand the market conditions that you're in. In fact, yesterday we talked about the consolidation patterns out there that we saw inside of the marketplace. And the real key is to try to understand, is to make a determination as to what kind of market you're trading in. In consolidations, much like if you were to take a look at the TAS market profile box, the larger the consolidation, the easier it is to be able to trade within that, because movements from top to the bottom out there, they offer some nice reward to risk, whereas narrow boxes, narrow consolidations, maybe not so. Maybe you're looking for a break of that area. Well, 50-point consolidation gives you price projections as well, minimum price projections. Typically, when you break a consolidation, whichever way it goes, you're going to do a measured move equal to that consolidating pattern. Well, this 50-point move, which was identified a week ago, at least a week ago out here, what we saw was that price projection would have given us about the 4,000 level. We're trading at 4,008.75 right now. So in essence, because the break of the consolidation, was it at 4,055? It up to over 4,050. We're right in that range as we speak right now. So the measured move of the consolidation, in essence, is done or is very close to being done. Now, can you do more than that? Absolutely. But I will tell you that the first fulfillment of that objective is very close to being complete, if not complete, out here. There is no real strong A to B equals CD to the downside pattern, but if we were going to draw one in, and we are going to draw one in, what we would do here is I'd start right here at the swing point. Looks like about 2 o'clock in the afternoon. That was on September 9th. We'd make that as our A point out here. And there's a couple of B points that you could choose, but let's go with the most aggressive one. The most aggressive one, why didn't that work? The most aggressive one out here, there we go. The most aggressive one comes down to the low that came in Sunday evening at 2,300 hours. So that becomes our B point. The C point, basically, as we were opening yesterday, as the market came into the open at the 9:30 open. And what we're going to see out here is we're going to see that the one-to-one price projection on that takes us to 39.93. We're trading right now at 4,008. So what should we expect? Hey, at 39.93, maybe at that stage we start to see a market that settles. But I would have to say, if we've identified the correct C point here, if that A to B leg which has taken place. It brought us right back into the top of the consolidation before price broke. I would have to tell you that because that moved down yesterday, we're likely to see a move beyond the 39.93 level. You're more likely to see a push down into 39.72 range. So there's a secondary tool that we've got here. We've also got a TAS signal box on that 5-hour energy chart. That's at 4,016. Unless you see the NASDAQ get above 4,016, its message is one of lower price out here. That lower price, I suspect, in that 4,000, 39.93, 39.72 level at this moment. Let's go take a look at a fourth tool out here. If we take a look at that 5-hour energy chart, what I show on my system is that the NASDAQ topped out with that wave F. What is that? EFG. That would be the sixth wave of a 7 possible wave up inside of the Chapman wave. And then what does the market do? Makes 4 waves down. That came into the time frame here of about 2 o'clock in the afternoon against a 5-hour energy chart we're looking at. Goes ahead, makes 3 waves up. So we can go ahead and we can keep this 4-wave system in here. And if we do that, then right now you're down at that 7th and final wave out here. If that moved down, that's one possible number count. Another number count you've got out here is just really coming off of that high that we're using for our A point. So what is this all saying? It's all saying we should see the NASDAQ bounce. Maybe it's not early on here today, but maybe it's right around that 39.93 or 39.72 level where we start to see a bounce inside of the NQ. This is Steve Rhodes at TFNN. We'll be right back, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're off to the races. We got the Dow trading off 34 points. S&P down 3. NASDAQ Composite down 12 points. Russell 2000 up a couple points here this morning. Gold up $1.40. Silver up 9 cents right now. Light sweet crude. What is that? Where'd that go to on my chart out there? There we go. It's up 61 pennies. Trading out of 93.52. To the upside out here, Rewalk Robotics. That's an IPO up for a third day in a row out here. You've got Tesla up $1.54 after getting just smoked yesterday. Sino Cooking Coal is up 34%, up $1.85 out there. Interesting. Barrett Bill Corp up 8%, up $1.67. Google up $1.28. SodaStream up $1.15. CBL and Associates up. Is that Coldwell Banker? Must be Coldwell Banker. Up $1.02 out there. To the downside, we got Netflix off $8 this morning. Wynn Resorts struggling. We saw that stock has been struggling here as of recent. It's off $7. GoPro down $3 and change. Illumina off $3. Las Vegas Sands down a couple dollars. China Mobile down $2. Amazon off $1.58. Cummings off $1.74. Let's go check in on some of these equities here that are moving to the downside. Let's start off by taking a look at Netflix out here. NFLX gapping down this morning after a wide-ranging bar and some volume to the downside yesterday. Let's go take a look at that volume. Actually, not too bad. Only 2.9 million shares. Yesterday, it had held its market profile low, so to speak, just slightly underneath it today, gapping down. What are we likely to see here inside of Netflix? Let's go ahead and pull this back out here. Let's take a look at some retracements. What has it done since this little hammerish-looking candle on August the 1st to the high that was put in here inside Netflix on September the 9th out here? So right now you're down. Let me actually expand this out. So in Netflix yesterday, moving into the 0.382 retracement with a wide-ranging bar. Of course, anytime you move into a level of support or resistance with a wide-ranging bar, what's that tell you? Likely more to come. In this case here, gapping down. Not completely to the 0.618 retracement level, but 441 is on its way out there. If you get volume moving to the downside, ought to see Netflix maybe pull back that August 1st low out there. Maybe a bit of a consolidation period going on inside of Netflix after a nice run to the upside. Wynn Resorts, if we check in on Wynn Resorts, off off $6, off 3.5% this morning. Let me see what we got here. Let's pull this back inside of Wynn Resorts. So Wynn Resorts, we were taking a look at the A to B equals CD to the downside. That took place, April 28th, swing point low was 188.43. The volume there was 3.7 million shares, and volume was passed with 4.7 million shares. That says, even though it's trading at 174 right now, we ought to see this move down to about the 161 level. That is on WYNN. Let me see. We're down around that 161 level. Do we have anything? You've got a swing point really on a daily basis. Takes you back to the November 2013 time frame. So that's what it looks like Wynn Resorts is attempting to do out here. Let's take a look at Illumina. ILMN is the ticker symbol. Off a couple of bucks this morning. We're looking at its daily chart out here. Trading below market profile lows. Got a bearish EMA crossover. Got the whole 9 yards. Volume yesterday coming out of this, only 819,000 shares, so not too bad. Looks like this is headed back to its August 6th swing point. That only has 635,000 shares, so we'll have to watch to see if it's going to take that level out. That price range, 161 to, that's the high, the low, 156. That is on ILMN. It ought to find some pretty decent support back there. Why do I say that? I take a look at this little breakout session here inside of Illumina. That's the last area where it also found support, and that's in the 159.50 range out there. That's at just that little high volume bar. So we'll see if Illumina can hold that level, but that is where she is targeted. Let's take a look at Las Vegas Sands. LVS is the ticker symbol. If we look at Las Vegas Sands gapping down this morning as well, it has already exceeded the 1-to-1 A to B equals CD to the downside. Next stop down at the 1 to 1.272, down about $59.38 out here. Right now it is trading at $59.87. Let's actually put this on a weekly time frame. Let's go see what else Las Vegas Sands has in store for us out here. Las Vegas Sands looks like it's actually headed back to its June 24th, 2013 swing point out here. That price level is about $47.95 to $53.41 out there. It's not as if Las Vegas Sands has exploded. However, the danger here inside of LVS is actually on a weekly basis. It has a untested high volume low. That takes you back to 2012, folks. July 23rd, 2012, $34.72. It's trading at $59.86 as we speak right now. Also to the downside, the jazzy one, JAZZ. You got to love that ticker symbol. At least I love that ticker symbol out there. Jazzy one now making a double top out here. That double top coming in right around the price range of 176.60 out here. Big gold bearish engulfing key reversal session, and it's a weekly chart that we're looking at, and that is the week of February 24th out here. That is at 176.60. That is a key level of resistance. Break above that, well, that would be very bullish out here. Now, on a weekly basis, we'll switch over to the daily. Right now, trading in towards its weekly profile resistance level. If it breaks that at 155.91, says it ought to come all the way, in my opinion, says it ought to really come all the way back to the bottom of what looks like could be a consolidation range out here. And that consolidation range inside of the jazzy one, right down around the 123-ish level. So you're looking at about a 50-point move inside of the jazzy one way or the other. That consolidation would really be set up if we see a pull back into that area. But let's take a look at the daily chart for the jazzy one out here. Let's see if there's any kind of volume behind its move. Now, this had a nice breakout session. It actually looks like it also completed a 1-to-1 A to B equals CD to the upside as it was making that high, as it was getting that 176.60 area. That A point on this for that pattern was this high volume, that high volume low, untested low out there inside the jazzy one. That is on May 9, 2014. That was your A point, the low of that session. The B point came out here on July 7th, makes a 0.786 retracement, 75% on my chart out here, but we're going to give it the old Fibonacci summation number out there. And then it moves higher and it completes a 1-to-1 A to B equals CD. Now what we're seeing out here is you've got some support, this market profile support in the 156 area. If we see a break below that, then Jazzy One might find some support here on the candle session from August the 6th. The high there, 149.95. Any break below that says it ought to pull back at least to the bottom of that candle session out here. So far, volume to the downside, not too bad. It did accelerate slightly yesterday, but compared to what it was going against, being September the 5th out there, not really too bad. The Jazzy One, a strong-looking stock chart out here. Maybe we'll get fortunate and it'll move down to that 120 level on light volume and form a consolidation out there. That would be a decent trading range when you take a look at consolidation patterns out there. Also moving, you've got China Mobile. CHL is the ticker symbol, off about 3.5%. Maybe there is still a liquidation event going on in order to try to free up 25 billion dineros for the Alibaba IPO out there. So you got to raise 25 billion. This is more than just funds out there being able to trade one stock for another. Now they actually have got to come up with cash, and I think that's really what we saw taking place yesterday inside of the Nasdaq. China Mobile, so many gaps out here. I don't know how you would actually trade this thing and be able to get any type of really solid information out here. Probably what you need to do is go over to the Chinese website, the Chinese stock exchange, to really be able to track this, because I think you got currency issues and a whole bunch of other things. So my apologies, but no way for me to give you anything valid information inside of CHL, China Mobile. That's not the case over in Tesla. Let's go take a look at Tesla, TSLA. It got whacked yesterday. Big volume to the downside. Today having just a bit of a counter trend rally out here, but you had big volume, meaning 16 million shares inside this sexy stock out here. This ought to run down to, let me get rid of this swing point out here. That's from prior sessions out here. Let's go see what Tesla is likely to do as we look at this stock chart. Well, let's just go back to the basics out here. Let's go take a look at retracement levels. Let's come from the low out here from July 17th to the high that was put in inside of Tesla. That was on September the 4th. You've broken through the 0.382 retracement level of the wide-ranging bar. Tesla at least pulled back to 243.33 out here. Yeah, and even 230 would be a pretty decent range out here. You've got these fairly good price action, good volume bars, the trading session of June 16th and June 17th out there, and those range anywhere from 206 to the 225 area. So that is likely where Tesla is headed to, TSLA. We've got Zillow jumping in on the fray here this morning. Z being the ticker symbol, up about 3%, up $3.65 as we speak right now. Now Zillow having pulled, how about that? Actually Zillow, do you want to trade Zillow in the opposite direction of the market? Because Zillow now has pulled back to its breakout area. That breakout range really being anywhere between 125.60 and 123.25, and you got a nice bullish candle today, and the pullback is on light volume. How about that, folks? So if you are a fan of buying breakouts, well, here you go. You got it right here, right now. Zillow, if you take a look, we'll pull this chart back a little bit further. Let's do a little bit more investigation on the Z-Man out here. Different than our Z-Man inside of the Tiger's Den, who called the top there on September 3rd. Congrats to Z. But let's take a look at Zillow out here. Zillow had wide-ranging bars, accelerated volume, the whole 9 yards, 7.7 million shares to the upside on July 24th, with follow-through the next day, only 4 million shares. But, hey, it's got an untested high of 8.7 million shares. That high is out at 164.90. That says that the Zillow ought to get up there at some point in time. The question is this the place? It's the place to place the trade and just simply have a tight stop. No guarantee whether this will work or not, but, boy, it did come back to a breakout area with light volume. That is certainly what you like to see take place out here. If it falls from grace, meaning it closes below, I'm going to use the 123.25 level out here. Where will it run to? Well, let's put this on a weekly chart. We need to do that anyways. Let's go see if there's some other weekly information inside of Zillow that we have to pay attention to. None other than that rocket ship out here. It's on Launchpad A. So what Zillow did have is two dojis back-to-back from a weekly standpoint. The weekend of July 1st. I'm on a monthly chart. Forget about the weekly chart, folks. I'm on a monthly chart out here. So for 2 months in a row, Zillow not doing a whole lot. Two doji candles in a month, saying that it's lost its direction out here. Well, we've seen that it lost its direction. It's lost its direction. It came back into a breakout area on the daily chart. Now, let's go switch over. Let's see if Stevie can actually choose the notation that says W for weekly. That would make it a whole lot easier to take a look at a weekly chart. That's how it works on my system. Not sure how it works on your system out here. If we take a look at Zillow, it says 117.86 as its point of control. Still looks bullish on the weekly. Is it high volume, high on a weekly? Oh, it most certainly is inside of Zillow. So if it falls from grace out here, where will it fall back to? That is really what we want to take a look at. Where would be the next buy point inside of Zillow? And I'd have to say, we got to just go back and take a look at some retracements. And so that retracement that I would start with on a weekly basis takes me back to December 2nd, 2013. Of course, it would be good if I actually implemented and utilized the tool to figure that out. Let's go do that out here. So Zillow basically making just slightly more than a 0.382 retracement as we speak. And the 0.618 area, 106.42. But it looks pretty good. Now, let's go back to the daily time frame out here inside of Zillow. And on the daily time frame, you got a nice bullish candle out here. Not a bear separating line, but a bull sash for sure. And so I guess a confirmation. You hate a trader to say, I guess, right? How about let's just restate that. A confirmation of a continued move higher. You ought to see it close above its market profile low out there, which it broke over the last couple of days. And that's at 130.86. Of course, getting above 134.13 would probably be the icing on the cake. Maybe add a little bit of coconut. Don't you like coconut added to your icing if you're going to go ahead and eat some cake? I know I do. Anyways, that's what's going on inside of Zillow. Looks pretty good out there. Let's go take a look at let's go take a look at what is this GRT? Let me see. Is this a buyout? It's jumped to a new high. Yeah, that's a buyout. So we don't want to be spending any time there. Hey, let's go take a look at Regeneron Pharmaceuticals, REGN. We're going to have to do that when we get back from this breakout here. 877-927-6648. Maybe we'll check in on the NASDAQ, that 5-hour energy chart as well out there also. We'll be right back, folks.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
That it is, folks. It is always better when we're together. Thanks so much for joining us here at TFNN.com. Don't forget that check-in time at the Hotel California now kicks off at 8 a.m. as our man John Logan kicks us off, and we go for 10 hours today all the way through 6 p.m. Right now we got a flat market. Dow's up 2, S&P's up 2, Composite up 3, Russell 2000 up about 2 points out there. I mentioned Regeneron Pharmaceuticals. Let's go look at that. Then we'll go take a look at the NQ out here. If we take a look at Regeneron Pharmaceuticals right now, traveling right up into resistance of its market profile, right up at the 353.05 level out here. What do we know about Regeneron Pharmaceuticals? Hey, a nice gap up, a nice day, a nice wide-ranging bar. Volume to the upside. That high's got to get tested at some point in time. That high, by the way, is at 369.31 out here. Regeneron Pharmaceuticals has not broken down. It's only really shown us signs of strength out here ever since coming off of the lows back in June of 2014. That is what's going on inside of that equity. Still up against a little bit of a resistance level, but at some point it's going to go test that high out there. Now, we began by looking at the 5-hour energy chart out here. So just as a quick review, and then we'll go switch down into the 120-minute chart. So what do we know about that 5-hour energy chart? Well, number one, we had a 50-point consolidation move that gave us a price projection of somewhere right around the 4,000 to 4,005 level. What we've seen take place thus far is the low out here is 4,004.25. As we said, we've fulfilled that one measured move out here. We also can take a look at Chapman Wave-wise. You're either at a E or a G at this stage here. Now, this bar on my system doesn't end until 2 p.m. So we don't have a lot of information. You got to wait. You got to wait. And I know many of you don't want to wait for that 5-hour energy. So we're going to go switch over and see what the 120-minute time frame chart shows us. It's got those same patterns that are in place out there, the A to B equals CD pattern out here. But if we do take a look at the market profile on the 120-minute time frame for the NASDAQ, we're going to see that's at the 4,016 level. And we're going to see here during the move down this morning, that price point has not been broken. Does this mean that we're going to see a reversal here, or are we just simply going to see the market with a slight bounce out here? Well, the answer to that question in the 2-hour chart says, hey, if you get above 4,033.70 out here, then maybe you've got more move left in it. That is your market profile high we'll go ahead and resistance level. We'll go ahead and use that as resistance. That would actually be a place to sell from if you're looking to short the NASDAQ on its 2-hour time frame. As far as counts to the downside here in the Chapman wave, you're at a level F as well. So you're at 6 out of 7 during this 2-hour time frame. That is basically the only count that I see that would really be valid. I guess you could restart from right here from yesterday at about 10 a.m. as well. But we'll go with this longer count out here. So you've got the bulls. We know where they're defending that price at. Really in the lows of today. You've got a little bullish engulfing candle. Now, this 2-hour chart here, this does not end for another 3 minutes. And in the meantime, I need a quick drink of the green juice. Sorry about that. That was not much of a drink out there. Didn't realize I was empty. Well, folks, that's the end of our show today. Thanks so much for being here with me. Stay tuned. The Money Masters show is up next. If you're off to start your day, have a terrific Tuesday. And always remember this, folks. You have an amazing power within yourself. That power, it's so strong. It'll create a life of abundance. It'll cure incurable diseases, build billion-dollar businesses, but most of all, folks, it'll create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Tuesday. I look forward to seeing you soon.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.